We have been aggressive with buybacks. Our multiple hasn't moved. Understand some of the pessimism that's been out there in the market given the past cycles, but hopefully our consistent results quarter after quarter and year after year are beginning to convince those investors on the margin that this is a good long-term play.
That was GM CFO Paul Jacobson speaking with our executive editor Brian Sozzi earlier this morning after the company's results came out, beating expectations in the third quarter and lifting its full year guidance. Joining us now with his reaction to the report, we've got John Murphy. He's a managing director over at Bank of America. John, it's great to have you. I want to circle into GM's ability to cut costs in the U.S. to kick off the conversation. What do you attribute that to?
You know, I think it's a long-dated plan. I mean, by this year, they'll be completing a cost-cutting plan of $2 billion. So I think there's the cost-cutting side, which has been pretty successful. But I would couple that also with a focus on the right product and the right mix, which is helping pricing as well. So there's a combination of great execution from a cost perspective, but also great execution from a product portfolio and pricing perspective that are creating these very large margins, near record margins right now.
John, when it comes to some of that, should there be any concern around the fact that they did warn that pricing could be a bit softer next year, or the fact that that could potentially be an outcome? Just their ability then to offset that with cost-cutting measures elsewhere?
Yeah, no, it's pricing is the billion-dollar question for GM and for the industry at large right now. I think what you're seeing is a pretty good management of short-term inventory on dealer lots by GM. Ford, it's not quite as tight, but it's reasonably good. And Stellantis is where there's a little bit of an issue in the industry. The rest of the industry is actually relatively tight on inventory. So short term, I think we're not too bad off on inventory. I think the thing that gets missed often in the industry is that the late model supply of vehicles on the road in the United States is very short, and we need to rebuild that. Until we rebuild that, the real pricing pressure in the industry is likely not to ensue. So I think that would be a kind of event that would be late 25 or early 26 if the U.S. new vehicle sales rate starts getting to 16 million units plus, and we rebuild that late model fleet, because that really is the substitute product of new vehicles. So I think we actually probably have more clear air on pricing than people realize, at least through the end of next year. Now, there'll be some negative mix for sure. You're not going to continue to sell as many large trucks and luxury vehicles as the SAAR increases or sales increase. But I think pricing itself is probably far better off than people realize or fearing.
It seems like there was a lot of resilience across the report then, John, because the other thing I wanted to get your thoughts on is their ability to kind of survive some of the weakness in China, which certainly some of the other automakers have not been able to say the same thing about. What do you make of that? What are they doing differently?
Well, I mean, they're still losing money in China. So, I mean, I wouldn't say it's a great picture. I think it's something that needs to get addressed with their largest JV partner, SAIC. And ultimately, I do think it's going to be very difficult for the international manufacturers, even with JV partners, compete with the growing number of domestic manufacturers in China. And that's going to continue to be a problem for us quite some time to come. So I think the reality is GM needs to shrink dramatically, or probably even exit the China market sooner rather than later, to really stem these losses. It's quite like what happened in Europe. And Mary Barra, the current CEO, did a great job of exiting Europe in the past, and I think you're probably going to see the same thing happen in the next couple of years in China.
Yeah, John, I was going to ask you the timeline of that, because we know that they are planning a restructuring there. There seemed, though, to be some optimism surrounding potential improvement, though, in China going forward, but it sounds like you're not too optimistic that maybe some of those goals are realistic at this point.
In an industry that's historically lived off of scale, walking away from the largest car and truck market and the planet is kind of a tough thing to do. But the reality is big parts of the market often are areas that you don't make a lot of money in, and you need really to focus on what your core is. And GM's core profit center is North American trucks, and they would be generating at least as much, if not more, EBIT and free cash flow if they just focused on that alone. So ultimately, it's going to be a tough decision. It's a little bit scary to walk away from that kind of scale, but it'll probably ultimately be the right decision.
John, final 30 seconds here. China holds the materials, the means of production for EVs. I wonder, from a policy perspective moving forward, are you worried that China could say, yeah, you can have our materials if you buy our EVs? And what could that do to the automakers moving forward?
It's a very good question, and it's a question that's going to be difficult to answer in 30 seconds, but there is a lot of leverage that the Chinese have built up over the last decade plus in the EV supply chain that the U.S. is going to have to address, not just from a GM perspective, from a national perspective and a national security perspective as well. So that is going to be a long-dated issue, and it is going to be a big point of leverage that Chinese have in any discussions around EVs. And we'll probably tamp down EV penetration here in the U.S. for the next few years, and probably through the end of the decade, until we rebuild or build our own EV supply chain.
All right, John Murphy, great to get your insight. Thanks so much for hopping on with us, Bank of America's Managing Director. Thank you.